And I mean, quite clearly, it would drive the price higher. But I think we've got to look at the motives of the Reserve Bank. I can see two reasons why they would do this. The first is that in the longer term, however that is, whether that's 1 month or 10 years, they probably see the need for coinage. So they would need to acquire. I mean, you could either do it as a central bank reserve asset or something part of a wealth fund or whatever. But they would need to acquire stocks of silver in order to be able to do that. So I think that's one thing we ought to bear in mind. I think the other thing is one of the problems that the Reserve Bank actually faces, and that is being banned, if you like, from owning fiat currencies by us. So she can't even put, if you like, currency, her own reserves. She can't actually get her own reserves up by increasing dollars, increasing euros, or whatever it might be. I mean, she's probably got enough Chinese yuan to, that she might be comfortable with. And I think, therefore, that she's probably doing, we're all doing here. I mean, the three of us, not understood, if you like, by the majority of people, thinking, well, we're not going to stick just to fiat. What we will do is we will also accumulate monetary metals. And part of the answer probably is that the Russian gold mines can't get the stuff out of the ground fast enough in order to satisfy the Reserve Bank's demand for gold. So I think there are a number of reasons that are probably specific to the Central Bank of Russia, rather than, let's say, necessarily the beginning of a trend of other central banks deciding to go and buy silver. I mean, I wouldn't rule other central banks buying silver out. I wouldn't rule that out. But I think the Russian central bank is in this rather peculiar position of really not being able to pad out her reserves with fiat currencies. The Silver Institute reckons there's been a supply deficit for the last 4 years. People in the industry, or like in the LBMA or whatever, will say that, there's plenty of above ground stocks, in the form of, held by investors and strategic funds and all the rest of it. So that, there isn't really a shortage. Those will be drawn down on. But, the problem you have with that sort of approach is that, investors and holders of, stocks in reserve, they can see that this is a situation where, if they let stuff out, they're not going to get it back. So what do? You just hang on to it even more tightly. Well, the first thing, there's absolutely nothing on the money front. They were saying, basically, there were two things that perhaps we were looking for. One was a trade settlement currency of some sort. Now that has been effectively ruled out. And that's realistic because you have to come up with something which is better than the dollar which you're replacing. Otherwise, people won't use it. It's as simple as that. Really needs you to have something which is gold backed. And I'm not sure that would ever make the cut with the existing BRICS membership, particularly with India being very much against it. So that's the first thing. But also, while we're talking about currencies, the overall political background was one of extreme nervousness on two levels. Firstly, with China and Russia concerned about not provoking America unnecessarily. From China's point of view, she's always had this strategy of let your opponent make all the mistakes. And the Russians have been doing this brilliantly as far as the Chinese are concerned. So, just let them carry on making the mistakes. Don't suddenly sort of get aggressive and, get them to sort of suddenly wake up and think, hold on, we've got a better way of dealing with this. So that's on that level. The other level of nervousness were amongst BRICS nations, the other nations that attended who are looking to join, and their nervousness is that America, could well boomerang back on their trade. If they owed dollars, and most of them owed dollars big time, which yeah, maybe to the IMF. But I mean, the thing is that the IMF is controlled by the Americans. The Americans can call in the shots. So, you don't want to upset your bank manager, as it were. On top of that, of course, those Americans are not above creating regime change in foreign nations. So, there's a lot of nervousness about how this would be approached. So you can see that while some people are getting quite excited about the whole thing, they're beginning to see a bigger picture, and thinking is immediately going to happen. No, this is something which, as far as China and Russia are concerned, is likely to take some time. They're going to respond to events, not create them. The other thing, which is very interesting, so that deals with with the money side. They are continuing to work, incidentally, on having a sort of SWIFT alternatives and all the bells and whistles that are required for that, and the ability for banks to settle in currencies with each other without using the dollar is still a work in progress, etc. So that's all rather boring. The other thing, which I don't think has been really noted, is that they have created a new class of membership, which they now call partner status. We might call it association, an associate member of BRICS. But this is, they call it partner, which is exactly the same thing. It means that all these new countries can gradually sort of, assimilate themselves into a sort of common BRICS approach, if you like, to trade. And it's huge, great free trade area is really what it boils down to.
Alasdair Macleod podcast short summary. The Russian central bank is in a unique position as it navigates restrictions preventing it from using major fiat currencies like the dollar or euro to bolster its reserves. This has led to a focus on alternative assets, including silver and gold. While Russia's gold mines are unable to meet the high demand quickly enough, silver presents another strategic option. The Russian central bank's motives likely include long-term planning for coinage and safeguarding reserves with monetary metals, reflecting a move away from fiat reliance due to geopolitical pressures. Moreover, while some may anticipate other central banks following Russia's lead, it appears that Russia's actions are influenced by specific economic and political constraints. There is also concern within BRICS nations about the impact of challenging the US dollar, as many owe significant debts in dollars and face potential repercussions from the IMF and US influence policies. Amidst these developments, BRICS is advancing efforts to create a swift alternative and enable cross-border transactions without the dollar, though progress is slow and cautious. The introduction of partner status within BRICS shows an evolving approach aimed at forming a massive free trade zone, signaling a potential shift in global economic dynamics.